excited to announce our keynote speaker from our top literacy sponsor, TD Wealth and Women and Wealth program. TD Wealth keeps women investors top of mind, and they've been doing this for quite some time. They really have been trailblazers on the female front, and has launched a unique program that is dedicated to providing women a differentiated experience by understanding their unique needs, behaviors, and goals. The Women and Wealth program provides support and guidance to help women achieve increased financial health and confidence, something that is especially important in today's uncertain environment, as we've heard throughout the day. They've launched a national program where they have specific advisors who specialize in helping women achieve their financial goals and have a number of resources available for all of you and all of Canada. We keep hearing today the importance of having women part of the financial discussion. And I want to reinforce, it's not just the discussion with your spouse. It really is just being part of the discussion and actively engage, whether you're single or married or divorced. All women really need to have a voice at the table and understand the importance of this. So with that, it is my pleasure to introduce our keynote presenter, Ingrid Macintosh, who thankfully is not suffering from a power outage up north. Ingrid is the Vice President, TD Wealth, Head of Sales, Enablement, Marketing, Communications, and Digital Strategy at TD Asset Management. That is quite the long title, Ingrid. And to add to that title, she is also the executive sponsor of the Women in Wealth program at TD, which I just mentioned. Ingrid has spent over 35 years in the industry, including 17 years of industry experience in fixed income trading and sales, institutional money management, and business development. I guarantee you she is very passionate on this topic, as I've actually had the pleasure of being on a speaking panel with her in the past and seeing her in action. So Ingrid, welcome and nice to see you again.
Thank you so much, Tula. Feel I have a little bit of an echo there. And I've been in the industry for 35 years. I think that my skills with respect to sharing on Zoom still have a little bit of work to go. How are we doing? Can we see the screen?
Yes, we can.
And we can see my presentation?
Yes, we can.
Excellent. Okay. So I want to thank everybody for having me here today. I am thrilled to be celebrating International Women's Day with all of you. This is a personal passion project for me, talking about women and their wealth and their financial confidence. And specifically, as we're sitting here in 2021, coming through the end of our COVID period, we have an awful lot to be focused on and to be working on. I'm hearing some feedback here. I'm echoing. I'm hoping that it's all okay there with everybody. Okay. So, bear with me just one moment, technology. We're going to spend a little bit of time today going through a number of elements. I'm going to talk to you about my background, my story. But we're also going to be talking about women's growing economic power. We have really come so incredibly far in just one generation in terms of taking the share of wallet in Canada. But that's not without challenges. We're going to be talking about a number of the challenges that are unique to women. And I would argue to all of you that that is not just in the industry, but some of that we impose upon ourselves. We're going to be talking about why women need a wealth plan. And I think that all of you being here today really speaks to the fact that you recognize the importance of this and you're taking the time to put yourself on that journey to better financial confidence. We're going to spend a little bit more time talking about the market and the retirement realities that are facing Canadians today and how you can be a little bit more retirement ready. I think as we go throughout today as well, I want to challenge some of the myths around women and investing. This year's International Women's Day motto is choose to challenge. So we're going to challenge the ideas of the myths of time, the myths of not enough money, and the myths of not enough knowledge. And we're going to try and address all of those today. Talk a little bit about myself. It's not because I don't love to, but I think it's really important. I think when Tula introduced me, she spoke about all the things that I've done in our career. And I think very often when you have a conversation about somebody's career in a moment like this, it tends to create distance between me and you. But in reality, as women, we are all so very much alike. We are mothers, we are daughters, we are spouses, we are children. For me, I am the only child of a single mother who was a maverick, a pioneer in her day, working in finance. I am married to my first husband, hopefully my last, but I'm his second wife. Together we have 2 children, and we have my 2 stepsons, my husband's children from his first marriage, who we raised together. Why I tell you that is it helps to give you a sense of the complexity of our journey along the way, and helps make some context as we go. And I hope that what you'll get from the conversation is that despite my 35 years in this industry and my time spent working with pension funds and helping people professionally manage money, I still made some of the same shortfalls in my own financing journey, the things we're going to talk about that sort of slow women down, I was guilty of myself. So let's get started and talk about women's growing economic power.
Ingrid, my apologies for interrupting. Would you mind just going on to your slideshow and starting at the beginning so we can see the full screen of each slide?
See, this is
just up at the top slideshow, and then you can do slideshow. Yep, from beginning, right there. Perfect. Thank you.
There, we're working perfectly.
There we go.
Thank you, Tula.
My pleasure.
So let's talk about women's growing economic power. Today, 56% of university graduates are women. And to put that in context, let's talk about just one generation. In 1991, 15% of women were graduating from university, and today that number is 35%. So we've really doubled the pace of women in universities. Our participation rate in the workforce has increased from 15% in the 50s to 91% of us are in the workforce. And in fact, the power of that has really grown. Today, 31% of women are the primary earners in their household. So what you're hearing from that is we're really on this journey of up-learning and out-earning, up-earning men, but there's still lots more work to do. Even more important, I think, to the financial services industry is understanding this concept of money in motion. Today, women control almost $1.5 trillion of Canadian wealth. And over the next 5 years, we will see women disproportionately benefiting from the money in motion, this massive baby boomer intergenerational wealth transfer that will vertically transfer over $1 billion, with more than 70% of that landing in the hands of women. In fact, by 2026, women control more than half of the wealth in Canada. Why I say that is I think we're at a turning point in the financial services industry when it comes to understanding the needs of women, paying attention to the needs of women, and starting to adapt our industry accordingly. This is first the vertical wealth transfer to women, but women also stand to inherit money twice through that horizontal transfer of wealth, either through divorce or widowhood as well. So really the tide is shifting. However, what we're hearing from women is they're not financially confident. Let's talk a little bit more as well about some of the unique challenges that women are facing on their path to financial security. And here we're going to talk a little bit more about some of the disconnects in the industry between women and how we're interacting women. And this might be one of the reasons that women are facing some of the gaps in confidence that they have. First of all, 60% of women in those critical pre-retirement years don't have a financial plan. That number is on its head for men. So there is something about women who are not yet stepping up to the table to seek out advice or get on that journey to building their financial confidence and ultimately their secure retirement. I guess the comforting thing there is if you find yourself in those numbers, it's not too late and you're not alone. Only 43% of single women today are working an advisor. And as we will see going through this conversation, that is actually a critically important in terms of a woman making it through to her goals and dreams. On top of that, 90% of women will at some point in their lives be the sole financial decision maker in their family. Whether women are living life that is single or married, or as a parent, as a child, at some point, whether we're ready today or not, we will be accountable for that responsibility. There's something about women in the industry as well. 87% of women struggle to find an advisor with whom they can connect. I've been around the industry a long time, and I know that the industry is loaded with jargon and technical terms. And I think there's something where we aren't connecting with women appropriately. Our industry is around talking about stocks and bonds and asset allocation. Women tend to think about money a little bit differently than men. They think about, will I have enough? What are the goals for my family? What do I dream about? How do I envision my life? And there's a disconnect there. So it's not surprising that if we don't adapt as an industry, we're not going to bridge that divide. 73% of women report being unhappy with the industry and would rather go seek out a family member or friend to try and get that financial advice. And on top of that, we're not helping things because guess what? A man is twice as likely to be approached by an advisor. So women aren't engaging with the industry and the industry is not appropriately engaging with men. We have to start bridging that gap. And that's part of the work that two of us spoke about with our Women in Wealth program here at TD. It's not just about helping women build financial literacy, which is critically important, creating that engagement, creating that awareness, but it's also about doing the work internally as an organization to ensure that we understand how women interact with money, think about their investments so that we can bridge that divide. I think one of the other really compelling stats for our industry to understand is that 80% of women fire their advisor when their husbands die. So if you're working in the financial services industry, it behooves you to do the work as well, to understand how men and women approach investing and money and making sure that we're having the right conversations and doing the work internally. Let's talk about some more of these, the challenges or some of the steepness to the slope of the curve for women. Despite massive amounts of progress, women are still making 74 cents on the dollar for every dollar that a man learns. Part of that, of course, is the nature of work. So 76% chance that a woman's role is part-time. And on top of that, 10 to 15 years, that is the time that a woman is expected to outlive her spouse. Generally, women live about 4 years longer than men, but also women tend to be married to men slightly older than them. So suddenly you can start to see how there's going to be this delta in terms of where women are going to be managing that money on their own. I mentioned at the outset that this is particularly timely because I'm quite concerned about the impact of COVID. McKinsey has been doing a study on women at work for the last 6 years, and the report coming out of 2020 is really quite frightening. If we think about the gains that we've made as women in our financial journeys, particularly through our careers, today, almost 1 in 4 women is considering opting out of the workforce because of the strains of COVID. So we know that women on average do double duty at home in terms of taking on the responsibility of children and the chores. That is putting almost 5 to 7 hours of incremental work on women as part of the pandemic. And if you imagine women now thinking that they will step away from that workforce, that's critically dangerous to women's financial future. Talk a little bit more about some of these life events that are unique to women. So of course, marriage, the blending of assets with a partner or not. Motherhood. We know that women, when they enter that motherhood portion of their lives, of course, they've got the time away from their careers, depending on how long they choose, but the focus changes as well. So this is one of those inflection points where women tend to abdicate the responsibility for finances and investing in the home. So I mentioned at the outset that I've spent 35 years in this industry. I worked in capital markets. I was a bond trader and equity trader. I spent 15 years advising pension plans on how to manage assets on behalf of their employees, and I've worked with advisors. My husband, my geologist husband, is a great businessman, but clearly I was the one who was well suited to thinking about finance investing. Yet in my own household, I abdicated that responsibility to my husband. And it's just an example of no matter who you are, some of these ingrained biases that we have around money and investing can play out. Divorce. Divorce can be devastating from a financial perspective. Of course, it's devastating on any number of fronts, but it's particularly devastating financially. So that is yet another life event that needs to be managed potentially in support of women. And of course, the death of a partner. Caregiving responsibilities. Intermittent work history. So we've talked a little bit about that earning gap or the likelihood that women might be working in a part-time role. On average, women are out of the workforce for 12 years, and that can be either childcare or elder care. So let me see. We are outpacing men in university. We are up earning. We have come so far incredibly, yet we're still only making 74 cents on the dollar, and now we're going to step away from the workforce. All to say that there are these structural challenges that create headwinds to women achieving their best financial future, and that's what we really need to be focusing on overcoming. Pivot a little bit to the concept of a wealth plan, because we've talked about the roadmap and all the good news and women taking control of money. But we need to start thinking about how do we bring more women to the table to get involved in that conversation about investing. I mean, you're all here today, so that's fantastic. We're going to talk about the importance of a wealth plan. When people talk to me about the money management industry, they think it's incredibly complex, and they talk about stocks and bonds and as a result, I think women step back from even engaging in the conversation because intuitively we are not boat rockers. We love a sense of community, but we don't step forward when we don't know something. So we step back a little bit. Engaging in that process of having a wealth plan is really one of those first steps on getting into that journey to your financial future and also building your financial confidence. And it's not a complicated thing. It really is just, what is that goal for your future? What does it look like? What are you trying to strive for? What does life and retirement look like, etc. It's also going to detail for you how you intend to reach those goals. Is it more savings? Is it more investing? Is it how you're investing? Is it how long you're going to work? And then it gives you that process for monitoring and following up and sort of a sense of hygiene around the progress to that vision for your future. And it can be as simple or as complex as you really want it to be. I think, when I think again about my family, I said at the outset, my husband's a first husband. I'm a second wife, stepchildren and children. That creates complexity. So when my husband and I sat down with a financial advisor, I personally didn't need the help with the conversation around what would my asset allocation be or things like that. I wanted to navigate the somewhat complex conversation of how do you write a will when you have 4 children, 2 stepchildren, maybe who are entitled to an inheritance from another side of the family. And really that partnership with an advisor created the landscape for us to be able to have that conversation in a neutral area and benefit from the experience of an advisor to say, you know, couples like you or in family structures like you, this is how I've seen it work, or here's a way to think about it. So for me, that gave me incredible confidence and comfort that I was thinking about it in a way that others had thought about it. And it also gave me a safe place to have what is clearly a challenging or could be an uncomfortable conversation, right? I mean, we're talking about money, but money is so many different things. It's tied to so much else in a relationship. So again, it talks about how you're going to save and invest. It talks about your life goals. It also talks about, you know, how you're going to protect your family and your loved ones, or leave a legacy. So with that, let's pivot a little bit again and talk about retirement realities and a little bit of a conversation about the market landscape that you can think about as you think about the world we're in. Just like we talked about the employment landscape or the education landscape, we've seen a real shift in the last generation, and we're in a very different time for pre-retirees and retirees today than we might have been 20 or 30 years ago. So first of all, recognize that your time in retirement might be longer than you think. So today, 45% of Canadians are living in the retirement stages of their lives. Lifespans are on the rise. You know, we're going to live longer than previous generations have. And in fact, as a retiree, that basket of wealth that you've created may need to last you up to 30 years. So think about that. Most of people work for 35 to 40 years. So you're going to have that time again that you need your retirement assets to last. In fact, there's a 41% probability that one member of a household will live to be past 90. Based on what we said before, I think it's going to be me. My husband's a little bit older, so but he's incredibly fit, so that's good. On top of that, we've talked about some of those other retirement, other elements for women. 43% chance that a marriage is going to end in divorce. I think you'd be surprised if I had told you earlier that the average age of widowhood in Canada is only 56. And in fact, almost 7% of senior women in Canada are living in poverty compared to 3.8% of men. And again, I think that in part is because women are living longer. Talk a little bit about the market and the retirement environment that folks may be facing. So first of all, one of the things we really avert is, and this speaks to the power of the advised relationship, but also speaks to some of the concerns that potentially women have about being invested in the markets. Investors who remain invested for the long term and can ride through the noise of volatility, and I invite you to think about the year that we've just been through, have always benefited over the long run. So what you see in the visualization here, the upward sloping line is the TSX's total return, right? So over time, markets do go up, equity markets go up. The blocks that you see is periods of time and orders of magnitude where the market was going up. But there are moments where we see real volatility, where it could be the tech crisis of 2000, or the financial crisis of 2008, or the pandemic of 2020, There are those moments where the market is volatile and people panic, or they become too risk averse because of their fear of the markets. And this again is where it's a really important thing to have an advised relationship to help you navigate that. At TD, we've done a lot of behavioral work as well to understand how people interact and think about money. And we've looked at it through a gender lens as well. And there's a number of personality traits that are particularly important when we think about managing money. And there's one where women fare really, really well, which is conscientiousness. What that means is, as women, if we take the time to set the plan, we have a much higher likelihood of sticking to the plan in moments of volatility like that. So this is really great for women. Let's also talk about the power of an ongoing investing discipline and commitment. And we're not talking anything here about the complex stuff around which securities or stocks or bonds. Let's just talk about the hygiene of making a plan and sticking with it. So what you see here is 4 scenarios. In the first scenario, in each of the scenarios, everybody invested $1,000 at the beginning of 2008 and set out a plan to add $100 a month to their investment portfolio. People here in the green line, they panicked in the financial crisis and they stopped making their contribution. They sold their proceeds and they just invested in low risk GICs. I heard a question at the end of the last presentation about, where should I be invested? And I know Tula talked a little bit about this, but this is fascinating. So to pull back all your risk and stay in GICs, you can see you don't make a lot of progress. The person in blue, they left their money in, but they stopped that monthly reinvestment. They stopped that hygiene of continue to save for their future. So while they still had market exposure and their assets were growing, they had pulled back, and that meaningfully impaired their long-term success. The third person in yellow left their money in, but they went, I'm going to pull back from $100 a month to $50 a month. And you can see how that power over time really impaired that overall portfolio. And that first person whose advisor said to them, leave your money in the market, leave it as it's invested, and stay true to your commitment to continue growing your investment portfolio, clearly did very well. So really the critical message here, wherever you are in the journey, is to make that commitment, to start on that journey and stay on that journey, because the most beneficial elements of investment are the ones that are free, right? Diversity and time. I also want to talk about the environment that we're in today. So the visualization you see here, 2 elements. The bars that you see along the bottom are the number of people in the Canadian population that are 65% and older. And you can see with the axis on the left-hand side that number is growing, right? So by 2035, over 25% of the population will really be in those retirement years. The second line that you see that goes up and down represents interest rates. Think of this as the risk-free rate. So if you were a retiree back in the mid-90s and you had built a nest egg, you could effectively transition that money into low-risk fixed income securities that would have yielded you between 5 to 7%. And could continue to just generate a very safe income for you from that nest egg. Since the financial crisis and subsequent years, we've seen central banks having to support the economy by lowering interest rates really meaningfully to where they are today, which is very, very low levels. So I will say this is not your parents' retirement. Today, it is insufficient for somebody to simply build a nest egg and take all the risk out of it by and coasting. But they really do need that advice to continue to navigate that, because what's worked in the past may not work in the future. If you think about the question that I often get, and this is really difficult not being able to see all of you today and interact with you, but the question that I often get is, well, I'm risk averse, therefore I think I would just feel more comfortable being in low risk investments because, well, I don't like volatility and I'm not comfortable, so I like knowing that my money is safe. So isn't that the safe thing to do? And this is where I really ask people or challenge people to manage that risk of market volatility today versus the risk of not having enough in the future. So if you were simply invested today in a GIC, for example, your rate of return would be below that of inflation, which would mean that the purchasing power of your money was declining, right? We have sitting at around 2% inflation, so you would be earning less than inflation. By contrast, investing in a balanced portfolio of stocks and bonds is going to give you a higher probability of a higher return over the long run, and giving you that opportunity to grow your assets and allow them to continue giving you that security in the long run. So if it isn't complicated enough to think about building that nest egg, there are things that once you've retired that might impact your portfolio. So if you think about what we call the accumulation stage of your portfolio, you're putting money in, you and your advisor are selecting a risk profile that would allow you to grow that portfolio, but you're never touching it, which is why if you're still in your earning years, you don't care about what happened last year because you're not crystallizing that loss unless you take the money out. You're letting that money stay and you're letting that money to keep growing. Once you reach the retirement phase of your journey and you're in the stage of drawing down that money or withdrawing or living off some of that money, that's when it gets a little bit more complicated and the power of an advised relationship really stands tall. So we're going to talk about the market impact on retirement. We have two examples here. We've got Kim and Dan. Kim and Dan are the same, and that when they hit that retirement age, they both had $200,000 in savings. Kim and Dan also were withdrawing $15,000 a year from that portfolio. However, the date that they retired was different. So even over a 10-year period, the return profile of the portfolio was about the same. It was give or take 10% annualized on average. But in Kim's case, the market was going up in the early part of her retirement. In Dan's case, the markets were going down a little bit in the early stage of his retirement, which means he was drawing down when the market value of his portfolio was down, whereas Kim was getting the benefit on the way up. So again, the power of an advised relationship to help you navigate this and think about the best way to optimize your portfolio in retirement to make it last longer is really, really important. Let's talk about retirement readiness. How are we looking in Canada today? We know that Canadians on average are saving about 12% of their income for retirement. It's about 14% in the US. Only 31% of women would consider themselves financially knowledgeable. If I asked you what would that number look like for men, the number is 80%. Now, I'm pretty sure the gap in knowledge isn't that large, but this speaks to some of the myths that I outlined at the beginning, which is women don't believe that they have that knowledge to be on that investing journey, and a lack of knowledge breeds a lack of confidence and a lack of engagement, and that really concerns me. As I said, men would say that they're more knowledgeable and they're going to step in and take control of their financial futures. The value of advice. We know that advised investors have 4 times the assets than investors without advice at 15 years. And I think that's a few different things. It's the getting on a journey and sustaining that hygiene of understanding that if I make this decision and keep saving my money, it will get me on this road, versus the markets are volatile and I'm going to step away. So there's a whole lot of things that happen in there, the tax effectiveness, the security selection, the investment solutions, et cetera, that really are the power of investing advice. And then we know that 89% of respondents who created a wealth plan have that sense of satisfaction that they're going to be in the financial position that they want to be for retirement. They can see that journey, they can see that they're on it and they're making that progress. This year's theme for International Women's Day is choose to challenge. And everyone that says to me, what do you choose to challenge? And it's like, choose to challenge these myths around women and money and women investing. The myth of I don't have enough time. That is where an advisor relationship supports you. And you can get the support that you need, but you need to make the time to start engaging in the conversation and the knowledge and building that confidence. People say, I don't have enough money to start. As you saw in the earlier example, just starting with a tiny bit of money and making those decisions to continue growing that portfolio over time, that commitment, you don't have to have a lot. You have to start with something and you just have to start on the journey. And that I don't have enough knowledge, this is the first step. You've got to do the work to start yourself on that journey, but I promise that the outcome will get you on a better path. When we talk about advice, it's not just about security selection. It's not just about doing the research on companies, but it's about that sense of community and having the conversations and getting women on that road to their financial confidence. So with that, I'm going to pause, Tula, and see if we have any questions.
Hello, that was wonderful, Ingrid. Yes, we do have some questions. I'm going to start with one that just seems to keep popping up and related to, some of the things you covered, and it's around if you're in your 50s and you really haven't started investing, or maybe you have, a few funds here and there. And I hear this time and time again. How do you make up time for investing? How do you make up time with investing for retirement if you're starting late and really jumping in there and not being afraid and thinking it's too late?
I think, again, the first thing is, starting the conversation, sitting down with an advisor, looking at the whole landscape, because you likely have more assets than you realize, right? So there's the investments in the portfolio. There might be your home, your real estate, you might have a pension plan, and you need to look at all of these elements holistically. I would also say, I'm a woman in my 50s, shocker. And sitting down with the advisor helped put that meaning to me, because I didn't feel that I had enough saved, but I started to be able to see what that journey looked like. It also helped me understand that if I look at a date where I'm thinking about retiring and I have a nest egg today of X, when I hit retirement, my nest egg doesn't stop, right? So my nest egg is what it is. And if it's invested appropriately, will continue to grow, because I don't need all those dollars on day one of my retirement, but I do need to make sure that I have them appropriately invested, that they can continue to grow. So wherever you're on the journey, start the conversation. I can't tell you how many times I've done these sessions with women in a great big room, and one woman stands up and she said, oh my goodness, I'm in my 50s and I thought I couldn't take on any risk because I was close to retirement. So I'm sitting in GICs. I'm going to go have that conversation. I'm going to go get myself properly invested. So I'll make that journey.
Yes, I think you hit a number of really excellent points there, Ingrid. And one, when you mentioned about at least gathering what you have, because a number of other issues I come across when I talk to women, they say, oh, I have some fund at RBC and I think I've got something over here and I have this TFSA over here, and they've got all kinds of, smaller amounts, but they need someone to help them pull it all together and put that money to work. And understanding what you already have, again, is uber important. This one I really like too, because I think people are always looking for just, small tidbits. And the question is, what is the best financial advice you've ever received?
Start early. Let me actually turn that on its head, because I would be pretending if I said somebody told me to start early. As I said at the outset, my mother was a pioneer. Okay, so in the 60s and 70s, my mother worked for a large pension consulting firm. She was an actuary, meaning she, like me, was a math geek, and she advised pension plans on how to manage their money. She also never bought real estate. She lived in the moment, lived for the day, and never saved a penny. And when she came to the end of her life, she had no savings. So that was the world that I grew up in. And I don't believe that I had good investing hygiene early in my career. I only wish I'd started earlier. Right. So you can't look back with regret, but you can stand tall now and say, what am I going to do for myself today? And for sure with my children, I have 4 children between 21 and 33. I tell them all the time, are you doing a little bit? Every little bit counts. Get on the journey today and start early. I also think the best app that I could ever create, I call it the boot app. Imagine if you were looking at a great pair of expensive boots and you decided you really, really wanted them, and you could quickly in your phone see what those $500 boots might mean in retirement 25 years from now. Would you buy the boots and feel great for a weekend, or would you feel great knowing that you had another 3 months of your expenses in the future? That's my next big idea.
Yes, I love that. The one thing I always tell people, it's never too late to start investing, even if it's a small amount. Get started in something. I think that again,
Start rolling the snowball.
The theme of taking action. So this question is, and I like this one. Oh, well, I like all the questions. They're all good. What is the safest investment for a woman who has very little to invest and no previous experience or entrepreneurship?
Safest investment. So I would say a balanced portfolio, but more tilted towards equity, but safer equities, dividend paying equities where you're going to get capital appreciation, but they're also going to continue to pay a return when you're in retirement. I think you'll recall me saying 20 years ago, if you had built a portfolio, the yield on government bonds, risk-free government bonds, would be enough to generate an income for you. That's not the case today, but high quality instruments like bank stocks, et cetera, are paying 3 to 4% yield and continuing to grow. So a balanced portfolio with diversification, but more than a historically tilted to equities.
I completely agree with those recommendations. Now this one comes up a lot too, and the question is around how to start investing. And for someone, let's say they have $50,000, they don't know of any financial advisors. The question to me often is, do I just walk into some branch, and then how do I, know if what they're telling me is valid for me? Like, do you have any recommendations on just getting women to that next step to take that, even if it's a small amount of money, and get started?
Yeah, so absolutely. There's a number of different ways to do it. There's with advice, there's without advice. I think the world that we live in today, there is so much information available. If you want to be a do-it-yourself investor, the platforms like TD Direct Investing have loads of information and research available to them. And there's apps like TD Goal Assist where you can start with a little bit of money and just pick a pre-built portfolio. Similarly, you can walk into a branch and all of the banks offer managed solutions which have built-in blends of stocks and bond funds and are rebalanced regularly for you. So you work with an advisor in a branch to determine your risk profile, your time horizon, and just get on that journey.
Great, thank you, Ingrid. I have a question that is not, I guess, full the scope of this conversation, but I think you would have an interesting perspective. And it is around, how do we attract more women into the industry as financial advisors? Because frankly, we have the soft skills, we're really good at it, we're good at listening, but yet the number of female advisors continues to stay static. So what can we be doing? And I really want all the participants today too to be open to maybe that's something they'd want to get into in terms of being a financial advisor, because it's an important job. It can be a lot of fun, very rewarding. But for some reason, we're not increasing the numbers of females in those roles.
Yeah, I love this conversation as a business leader. You know, diversity and inclusion, it's about creating a population within an organization that reflects the customer base that you serve, right? But historically, the advice business, which has been very entrepreneurial and very transactional, has been male dominated. So why have women not entered financial services and pursued careers as advisors? It wasn't a woman-friendly place, I would say. And I think the industry is really changing now. We've tried to be very deliberate in our listening tours to understand what was it about the profession that was leading women to not engage, right? And so we didn't have formalized leave policies. We didn't think about the concept of teaming advisors together, both from a gender or from a demographic perspective. A truly powerful advice relationship with a family stems generations and gender, and brings to it all sorts of different skills. I often get asked, do women prefer female advisors? And the answer is overwhelmingly no. 85% of women don't care if their advisor is male or female, but they want somebody that they can relate to, that listens to them, that speaks not in jargon, but can speak in the manner that they think about money and their futures, etc. You recall at the outset, I said something about the fact that 80% of women fire their husband's advisors when they die. Let me tell you how that happens. So imagine that I and my husband go to see our advisor for 20 years, and we go twice a year, so it's 40 interactions. And in each time that advisor makes the recommendation, men and women think a little bit differently, okay? Men, I think, are like this plinko ball thinking, where you give them something, they go bing, 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 decision, and they can't go backwards. I don't know if any of you've ever tried to pick a tile or furniture with a partner, and they're like, I like the white ones. I'm like, the white ones? What do you mean the white ones? Like, there's the square ones, rectangular ones with the bumps. Like, we spin around and then we like agonize over it. So anyways, in that moment, if the male partner has made that decision and the woman is not had the time to process it, they're thinking about it, they want to have more time to settle on it, the advisor has taken the male's response as affirmation, is now moving forward, and the woman is feeling disengaged in the conversation. So for advisors, we say, talk to both parties, check in with the woman, make sure that they are engaging as well. Because I tell you, 20 years, 40 interactions, you spoke to my husband, you didn't check in with me, guess what? When he's gone, so are you.
Yes, very true. And just switching gears a little bit, I know that we have a lot of attendees that are parents. Do you have any tips on how they can start engaging their children and becoming more financially literate?
I love this. It's financial literacy is so foundational. It's about the discipline of saving a little bit of what you earn. In fact, one of the next segments that we've built out at TD is something called 10 lessons. And it is financial literacy 101. Is think about if you're about to buy a car, new or used, what will that look like if you put a portion of that money in your savings over time? But it also includes, specific to women, some of the elements around thinking about, guilt and how much you're working and how you think about your children and all those things. So I'm having those conversations early, and demystifying money, I think, is critically important. And I also think we have to overturn some of those legacy generational elements of, it's not polite for women to talk about money, right? So we just have to get over to talk about money in forum. I think a third piece, when I think about women in wealth, we're just scratching the surface as an industry in understanding the differences between men and women. And we have so much more to do, and that is on us as an industry to do better. But when I think about the intersectionality of gender and race and religion, there are so many elements that once you get into a variety of cultures, gender really plays an important role, especially around the conversation around money. And we have to really dig into that and make sure again that we're serving everybody appropriately and helping everybody raise their game when it comes to their futures.
Great. And one of my favorite statistics that I often quote is around 60% of women would rather talk about their own death than money. And that saddens me because obviously the money conversation is important, and hopefully forums like this allow people to open up and really share their experiences and not be embarrassed if you don't have knowledge on certain topics or if you haven't started investing. Know that you're in good company. Let's, as a group of females, really start to change that. This question just came in, Ingrid, and I think it stems from the question I asked about getting more people in the industry with females. What is the basic certification to get started as an advisor?
So that would not be an area that I'm as comfortable discussing. I know that we can certainly get responses for the questions.
Great, thank you. I have a lot of knowledge on that topic, but it's not as current as it might be. Things are always changing with the regulations and the requirements. So
Exactly.
to the lady who did pose that question, we will get a response back to you. So I think that's it for questions. Do you have any parting advice, Ingrid? Just to kind of, I'm going to close off with a few comments, but is there anything you'd really like to leave with the audience?
Yeah, it's really for women to trust their instincts and build their financial confidence. It might feel complex, it might feel foreign, but don't let that keep you from stepping up to the table and taking control of your financial futures and doing the work, building your confidence.
Great. I couldn't agree more. And thank you so much for joining us today and for TD sponsoring and supporting this financial literacy event, and hope to see you soon, Ingrid.
Take care, Tula, and to everybody, happy International Women's Day.